Hello everyone, welcome back to Nathan Trading Academy. Today market looked quite volatile. Nifty recovered from lower levels. Bank Nifty also bounced after a short fall. India VIX cooled down significantly while the option chain is indicating an interesting battle between bulls and bears. So the biggest question is, will tomorrow be a gap up? Will sellers dominate again? Or is this just a pullback before another big fall? In today's video, we will analyze everything using option chain, India weeks, and FII DI activity, gift nifty, liquidity levels, technical analysis, and institutional data. And finally, I will share my trading plan for tomorrow. So watch the video till the end because missing even one second would mean missing an important market clue. Disclaimer: this video is made only for educational and learning purposes. Nathan Trading Academy is not SEBI registered. We do not provide any buy, sell, or investment recommendations. Please consult your SEBI registered investment advisor or financial advisor before taking any investment or trading decisions. Trading in equity, futures, and options involves substantial risk. Please trade responsibly. Before jumping into the charts, let us understand what actually moved today's market. We will first see global cues, gift nifty, India VIX, institutional buying and selling, because these four decide tomorrow morning's sentiment. After that, we will decode the option chain and identify where smart money is positioned. Let's begin with gift nifty. So let me take to the chart. Uh, Here is the gift nifty. Okay, yes, I have opened the gift nifty. Looking at the chart, gift nifty managed to recover from the day's low. Price is currently trading close to an important liquidity level around 24,160. This is the very near to the level. Okay. So the immediate support zone lies near 23,940, while resistance is placed near at 24,160 and 24,300. Right. So this is the 24,300. So this tells us that buyers are trying to defend the lower levels. However, unless gift nifty breaks above the resistance convincingly, we cannot assume a strong bullish trend. If tomorrow morning gift nifty remains positive, Indian markets may open with a mildly positive bias. But if overnight global cues deteriorate, the market may again test lower supports. So at this stage, gift nifty is giving a neutral to slightly positive indication, not a confirmation of bullish trend. Now let us move to India VIX. Let us move to India VIX. Let me open that. Okay. So this is one of the most important indicator because it measures market fear. Today, India VIX witnessed a sharp decline. Whenever VIX falls, it usually indicates that panic is reducing. Lower volatility generally supports stable price action. However, a falling VIX does not automatically mean the market will rally. It only means that uncertainty has reduced. Looking at the daily chart, VIX is trading below its recent spike. The important levels are 14.68 and strong resistance near 15.16 and immediate support, which is going to be the 13.06. As long as VIX stays below 14.7 to 15.2 zone, the probability of extremely volatility moves decreases. This is generally favorable for option buyers only. if directional momentum develops. Otherwise, it often benefits option sellers through time decay. Now let us look at what institutions did today. So let me take you to the FII DI data, right? So according to the exchange data, you see over this screen, domestic institutional investors were net buyers, which is around 1285, and across the exchanges, DIIs are bought at 2057 crores. Their buying exceeded their selling. Like if you see 15,966, 14,681. And across the exchanges, 18,300 they bought and 16,000 they've sold. So this is the net value of buying. So resulting in a positive net investment, this is generally considered a supportive factor because domestic institutions continue to provide buying support during market weakness. Foreign institutional investors, however, remained net sellers. Like you see at NSE, 13,608 they bought and 13,942 crores they've sold. Net value selling, that is 334 crores, almost 335 crores. Across the exchanges, they bought 14,388 and they sold 14,921. So net value, that is sold like 532 crores. So FIs sold more than they bought, leading to a negative net figure. This tells us that foreign investors are still cautious. What does this mean? Whenever DIIs buy and FIIs sell, the market often enters a tug of war. Domestic money provides support, while foreign selling limits aggressive upside. Therefore, unless FIIs also start buying, sharp rallies may continue to face resistance. This is one of the reasons why traders should remain selective instead of blindly chasing breakouts. So, combining all the information, India VIX has cooled down, DIs are supporting the market, FIs are still cautious, Gift Nifty is showing mild positivity. So, this creates a neutral to slightly bullish opening bias, but confirmation will depend on price action after the market opens. As traders, we should avoid predicting the market and instead react to what price tells us. So over the chart, which we need to observe so that accordingly we can take the decision. Like if you see over the Nifty chart, so whatever the action which is going to take place over the chart, so we should act accordingly. So now let's move to the most important part of today's analysis, the option chain. This is where we understand what professional traders, institutions, and option writers are doing. Remember one thing, price tells us what happened. Option chain tells us what traders are expecting next. So let us decode the data step by step. So let's begin with the Nifty. Let me take to the Nifty option chain. This is the Nifty option chain. All right. So after today's trading session, the option chain clearly shows that both buyers and sellers are active. But the market is currently trading inside a well-defined range. Instead of looking at just one strike price, we should focus on where the highest open interest is concentrated and where fresh positions have been created. So, like if we see here, in this almost 1,21,000, which is at 24,000 call, and 87,000 at 24,100, and 1,38,000 at 24,200, and 1,32,000 at 24,300. These are the resistance levels. Now, at the put side, if you see the major put writing which is happened, like here, which is the 23,900 and 23,800. So almost 1 lakh put writers at 23,700, which will be 75,000, put writers, and 23,600, which will be 1,30,706. So open interest represents the total number of outstanding option contracts. Higher open interest generally indicates stronger support or resistance because more traders have positions at those levels. So on the call side, we can observe significant option open interest at higher strike prices. This indicates that option writers are expecting resistance around these levels. Whenever call writers aggressively build positions, they are essentially betting that market will remain below these strikes. Unless these call writers start covering their positions, a sharp upside becomes difficult. Now, put side, if you see what we have seen, there is healthy put open interest at lower strike prices. This suggests that buyers are defending these support zones. As long as these put writers remain confident, the downside is likely to be limited. However, if put writers begin unwinding their positions, support can weaken equally, quietly. So, as today's change in open interest is even more important than total open interest. Like what we see here in today's change, like in this case, 51,820, and here the more value, the change which you can see here, 26,149. This is the major change. Here is the major change, and 12,000 and 17,000 major change which has happened at 23,900 and 23,950. And similarly, at 24,000 today's change, 27,000 today's change at 24,050. So major change which has happened at these levels. So fresh call writing indicates resistance, fresh put writing indicates support. So call unwinding generally supports bullish movement, put unwinding increase bearish pressure. So today's data shows that traders are actively adjusting their positions rather than making one-side bets. That means tomorrow first hour will be crucial in determining the next directional move. So another important indicator is the put call ratio. So here, put call ratio normally we don't discuss, but when we think of a PCR, put call ratio close to 1 usually indicates a balanced market. A very high PCR may indicate extensive optimism. So very low PCR often reflects bearish sentiment. So expected range, if we see tomorrow with the based on today's option chain positioning, Nifty appears to have a defined trading range. If the index remains inside this range, expect range bound movement with opportunities near support and resistances. So now, when we what smart money is indicating, what smart money people are looking basically at the price action, volume, trend, and support resistance, and institutional data, and India VIX. So the market remains inside an important trading range. Both call and put writers are active. So neither bulls nor bears have complete control yet. So tomorrow's opening and the first 30 to 60 minutes will be crucial. So wait for confirmation before entering the trades. So now looking at the daily chart, today's candle, like in the chart, this is the Nifty, closed positively. So let me go to in the daily chart. Okay. So as you see, it is closed positive after witnessing selling pressure. This is upper wick, which indicates the selling pressure. During the session, buyers stepped in at lower levels, indicating that they are still willing to defend the key support zones. However, the market is still trading below the recent swing highs, which means that broader trend has not yet turned strongly bullish. So important levels, the resistance, which will be like if you see, which is going to be the important resistance, 24,530 and 24,460. So these are the first zones where sellers may become active again. If Nifty closes above these levels with strong volume, you can expect fresh momentum toward higher levels. immediate support which we see here 23 over 135. This is one going to be the immediate support. If this level holds, buyers may attempt another upward move. The next support becomes near 23 295. So a break below this level would indicate increasing bearish pressure. Finally, major support lies at 23,805. So the daily chart suggests that market is currently in a recovery phase after a sharp decline. This recovery needs confirmation through higher highs and higher lows. So until then, every rise should be treated cautiously, right? So in the 15-minute chart, if we see what is happening, what we can extract from the footprints which left over here. So the 15 minutes chart show that after a sharp sell-off, buyers try to attempt. So from this position, we can see this is the buyer's tries attempted to a recovery, but the market has not yet established a strong bullish structure. So price is currently trading between today's support and resistance levels. So this means tomorrow's opening range will be extremely important. So if Nifty opens today's high, this is here, opens here and sustains that level for the first 15 to 30 minutes with good volume, buyers may gain confidence. In that case, resistance near 24,135, so here, can be tested first. If the level is crossed decisively, the next targets would be 24,287, 348 or 450. So if in the case of bearish scenario, if Nifty opens weak and breaks below 23,925 here, if breaks opens here, then sellers may dominate again a decisive breakdown below 23,805 and trigger fresh short selling. Therefore, avoid buying aggressively below support. So now let's analyze Bank Nifty. Let me take you through Bank Nifty chart. So this is the Bank Nifty chart. So Bank Nifty experienced a sharp correction, but managed to recover from lower levels. This indicates that buyers are still present. However, similar to Nifty, Bank Nifty also needs confirmation before we call it to bullish. So resistance levels which we can see 58,477 is going to be the major resistance level, what we see here. So this is the one, and 58,581. Okay, this is the 58,581 or major resistance zones. Unless these levels are crossed with a strong buying volume, Bank Nifty may continue to face selling pressure. And the support levels 57,764. And below that, support comes near 56,867. If these levels fail, the market may witness another wave of selling. So overall structure, the daily trend is currently neutral. Neither buyers nor sellers have complete control. Tomorrow's price action around these liquidity levels will determine the next directional move. So intraday picture, if you see, after today's recovery, the Bank Nifty entered consolidation phase. Almost, this is the 15-minute chart, so it's consolidated. This generally indicates that traders are waiting for fresh triggers. So for bullish, for fresh buying, price should sustain above today's resistance, that is this one, with increasing volume. Only then should traders consider bullish position. Bearish confirmation, if support zone breaks, this one, especially with increasing volume, fresh short positions may become attractive. Until then, avoid trading in the middle of the range. So let us now move to Sensex quickly because the video is getting too big, lengthy. So just to see what is Sensex. Sensex also is showing a similar structure to Nifty. The market recovered from lower levels, but it has not yet crossed important resistance zones. So key resistance around 77,326. This is the one, because as you see, whole day is in this range, and followed by 78,031 and 78,398. Once this cross, then here resistance may be faced and here resistance may be faced. So key support, the today's support remains near 76,576, followed by 76,259. A breakdown below these levels would weaken the structure further. So overall view, Sensex is currently showing the signs of stabilization, because whole day, which is consolidated, but confirmation will only come after a breakout above resistance. So uh, we have seen that all three combining like Nifty, Bank Nifty, Sensex, and India VIX and Gift Nifty. So the market is not strongly bullish and it is not strongly bearish either. So it is in a transition phase. The side that breaks the important liquidity levels first is likely to control tomorrow's session. So one important lesson for every trader: never assume that because the market recovered today, it must rally tomorrow. Similarly, don't assume that one red candle means a crash. Professional traders wait for confirmation. They let the market reveal its direction before taking decisions. So uh, patience is often more profitable than prediction. So whatever we predicted here, it is not sure. So what is the trading plan for tomorrow's? So we have looked at global sentiment, Gift Nifty, India VIX, FII and DI data, option chain, daily charts, and intraday charts. So when we combine all these factors and prepare for tomorrow's trading plan, this is the most important part of today's video. So if we combine all the data, this is my probability assessment, bullish probability, which is going to be almost 55%, and bearish probability, which is going to be almost like 15 to 20%, and sideways, which is 25 to 30%. Because India VIX cooled down significantly, DI buying continues, FI selling has reduced, Gift Nifty is indicating a stable opening. Option chain shows strong put writing around support zones. So however, markets are still below important resistance levels, which is why confirmation remains necessary. So whatever the levels which I have mentioned, that is going to be the for trading tomorrow session, right? So in intraday, for intraday traders, my suggestion is simple: don't trade immediately after market opening. Allow the first 15 to 20 minutes to complete. So let the market decide direction, then trade only after confirmation. This simple habit itself can improve your trading consistency. So option buyers particularly should remember one thing: if India VIX starts increasing, option premiums can expand quickly. However, if VIX remains low, time decay becomes stronger. Therefore, buy options only after confirmation, breakout, or confirmed breakouts or breakdowns. So risk management, this is the most important section. Please remember, never risk more than 1 to 2% of your total capital on a single trade. Always use stop loss. Never average a losing trade. Never revenge trade. The market gives opportunities every day. Capital once lost takes much longer to recover. So the final concerns, like market still below major resistance, global uncertainty continues, false breakouts remains possible. So overall, the market is showing signs of stabilization. Buyers have started defending lower levels. However, confirmation is still required before assuming another strong rally. So tomorrow, price action around support and resistance levels will be the deciding factor. Trade what you see, not what you expect. So remember, professional traders don't focus on winning every trade. They focus on following their system consistently. So the market rewards discipline, not excitement. Trade patiently, manage your risk, and keep learning. So if you found today's analysis useful, please like this video, share it with your trading friends, Subscribe to Nathan Trading Academy. Don't forget to press the bell icon so you never miss our daily market analysis. Comment below what is your view for tomorrow, bullish, bearish, or sideways. I would love to hear your opinion. Thank you very much for watching. Have a wonderful evening. I will see you tomorrow with another detailed market outlook. Happy trading. God bless you.